Welcome for this 2024 annual meetings Governor Talk. This is a continuation of the series, and I'm Alfred Kammer. I'm the Director of the European Department, and I'm very happy to have with me today Governor Fabio Panetta from the Bank of Italy. He has been with the Bank of Italy since 1985, serving as Deputy Governor and Senior Deputy Governor from 2012 to 2019, and has held the position of Governor since November 23. And in between, he was with the ECB as a member of the European Central Bank's Executive Board, and he is currently a member of the ECB Governing Council. And of course, he is the right person to talk to get insights of what is going to happen with regard to the ECB's monetary easing going forward. The ECB has started an easing cycle. Now the question is how quick, how fast, how far, and of course there are different views. One set of people concerned about that activity is going to be very depressed. On the other hand, some are concerned about that service inflation could be more persistent. And of course there's the question of what should be the terminal rate, because we are not quite sure about where the neutral rate is in this new environment. So Fabio, with that, what are your considerations going in to the next Governing Council meeting and the following ones in terms of considerations on how that monetary policy path should look like?
Well, let me first up. Can I speak up? The mic is not, is it on? Okay, so thank you very much for the invitation, first of all, Alfred, and it's a pleasure to be here and to have this conversation with you. We always have very stimulating conversations. I hope we will have an additional one today. On your question, it is clear that we have seen an improvement on the inflation landscape in the euro area. Inflation has gone down. We are now below target. This may be temporary because there will be some ups and downs due to base effects, but it is clear that the economy in the euro area is disinflating. On top of this, the real economy is weakening. The leading indicators, confidence indicators show very clearly that the economy is becoming weaker. In the last 2 years, the economy grew very little in the euro area, and the contribution from domestic demand was very limited. We grew because of the stimulus coming from foreign demand, but now foreign demand is also weakening. So I think there's a combination of low inflation, weak growth, and clearly this is conducive to further loosening of our monetary policy stance. How much? Well, I will not venture here into an analysis of how low we should go. I think we should continue. The direction of traveling is, in my view, clear. On the final destination, I don't think we should start this discussion on the neutral rate. First, we are still far away from the neutral rates. There's time to think and to discuss the neutral rate. Second, I would not take for granted, given the pace of the disinflation and given the weakness of the real economy, that we have to stop at the neutral rate. We cannot exclude that we can go below neutral, but it's too early to tell. Now I think that the Governing Council should be focused on developments in inflation in the coming months, and I think we should adjust the stance of monetary policy to the situation of inflation and the real economy.
Mm-hmm. In terms of communication, the ECB has been steadfast to emphasize data-dependent and meeting by meeting. And when we are looking at the IMF forecast, we are pretty confident that the euro area will reach its inflation target of 2% by next June. We are pretty confident that a gradual lowering of interest rates towards a terminal rate of 2.5% will lead us there. Why is the ECB so cautious in terms of explaining its policy reaction functions and providing more certainty on how that path is going to look like?
Well, being at around 2 after a phase of prolonged stability is different from being at 2% inflation after a spike in inflation that took inflation in the euro area at around 10%. So it is, in some sense, not too surprising that some of my colleagues are very careful, very prudent, and don't want to claim victory before we finish our job. But again, I think that we should take into account how the situation, how the numbers are evolving. In our projections, we have inflation at target within the policy horizon now for 3 subsequent rounds of projections. So for the last 9 months, we have projected inflation to be at target within the policy horizon. We were projecting in our last round of projections in September that we would get a 2% at the end of the 2025, in the second half of 2025. That is going to happen much earlier. And I think this will be a very important element in our decision-making process. On communication, you asked, your question touched on communication. Well, I think we should, also in communication, we should take into account the evolving situation we have on inflation. We had, during the pandemic, when inflation was very low and we were at the zero lower bound, full commitment, forward guidance. Then when inflation became very variable and difficult to predict, we have moved to meeting by meeting. So from full commitment to no commitment. I think now we are going towards a normal world in which inflation is going to oscillate around target. We have estimated target should go up, down from 2%, and I think we should return to a normal type of communication. That means concentrating on our reaction function. That is, discuss more and provide guidance in line with our medium-term orientation based on the reaction function, means discussing inflation expectations, underlying inflation, the situation of demand, productivity, wages. Finally, we should go back to a normal way to do monetary policy.
Good. Moving to a different topic now. We have been discussing the banking union and the capital markets union for quite a while, and progress has been slow. And there was a movement a while ago that we need to move faster because Europe needs more investment, savings need to be allocated where the returns are being created in order to really push forward on the productivity frontier and get rid of the dismal medium-term growth rates we are expecting. And there was a movement a few weeks ago on the bank merger front. And my expectation was this could be the beginning of a wave, because we have been talking about European banking needs to be consolidated in order to become more efficient and more profitable. First of all, do you see that as part of moving forward, that we need mergers and acquisitions in Europe and a more consolidated banking sector and more pan-European bank? And second, how do we overcome the obstacles towards that?
Well, I think that it is not unreasonable to expect mergers at European level. Why? Well, banks are currently very profitable, but that profitability is partly due to the legacy of the crisis. During the crisis, governments stepped in and gave very generous guarantees to banks. The non-performing loans have almost disappeared from the European banking landscape. Also, the specific conjunctural situation has pushed up banks' profits. Why? Well, because we were in a very unusual situation in which liquidity was very abundant and interest rates went up very rapidly, and margins, bank margins, became very, very, very large, very wide. So banks have generally become much more profitable. Less credit risk, guarantees, more interest margins due to the situation in the money market. This will not last. And given that there's, on the horizon, we will have a reduction of profitability, banks will try to reconstruct the levels of profitability they have enjoyed in the recent past, in a number of ways, including mergers. Now, should we have cross-border mergers? Well, that's the idea of the banking union. The banking union should be based on banks that have their operations at the cross-border level, even within the euro area. Now, if you refer to the specific deal that everybody has been...
I actually do.
Yes, I know you do. I know you do. I was trying to circumvent the question, but I mean, the assessment on that deal should be based only on the strength of the entity which would be formed through the merger. There should be no discussion on nationalities. There is no match between Italy and Germany. We do have matches in soccer. We usually win, Alfred, but yeah, this is not soccer. This is not soccer. And I mean, I don't get excited if an Italian bank buys a foreign bank. The same way I did not get excited in the past when foreign banks came to our country and bought Italian banks. As long as the banks are strong, they are profitable, they lend to the real economy, they provide high quality services to their customers, for me it is fine. And I'm sure that the assessment by the SSM on that deal will be based on objective analysis of the conditions of the bank that could result from the merger. We do have to have mergers in the euro area. Why? Well, because a monetary union requires some form of risk sharing. In this country, there's a lot of risk sharing. Empirical analysis suggests that most of the risk sharing in the US takes place through the fiscal budget and through financial markets. And we don't have these two channels of risk sharing, and still we are a monetary union. So sometimes in the future, we must have a well-functioning banking union. We must have banks that will operate cross-border within the euro area. And of course, sooner or later, we should discuss seriously about the capital markets union.
Moving to a different subject. When we're looking at our growth projections, we are coming out of the two crises we were facing with moderate growth, I would say, picking up in 2025. But the bottom line is that our growth projections for the medium term are just dismal for Europe. And I think there is, when you read the Draghi report and when you are looking at the commentary, there's wide agreement that we have a productivity and innovation problem in Europe which needs to be fixed. So what do you think about making progress on the structural reforms necessary, on strengthening the single market, on having companies operating to scale in order to create that productivity gains which Europe needs in order to increase living standards, and any implication that has for monetary policy?
Well, you are right. Growth has been disappointing in Europe. And we have both conjunctural and structural explanations for that. On the conjunctural side, consumption is weak, investment is weak, but that's not surprising after such an aggressive monetary tightening as the one we have done in the last 2 years. We have tightened 450 basis points, real rates have increased, and the reason why we did that was to cool down the economy, and we succeeded. So we should not be too surprised. And then we have uncertainty at the global level, geopolitical factors, so it's not very surprising. From the structural viewpoint, the euro area economy suffers from a very low productivity growth. And I think that the Draghi report makes several very important analysis of why this is the case. But I think that the factor on which we should focus our attention is the investment and innovation gap that we have in Europe, for example, compared to the United States. When you compare the investment rates in the US and in the euro area, investment is higher in the US, excluding construction. And innovation is a much more powerful force for productivity and for growth in the US than in the euro area. If you look at where that productivity gap has emerged, it's in high-tech, in the high-tech sector. There's a very nice analysis that has been done recently by Jean Tirole and co-authors, in which they look at the determinants, the different motivations why productivity has grown very fast in the US and has not grown in Europe, and the motivations are basically the capacity of the US companies and US investment to get the benefits from the ICT revolution 15 years ago, 20 years ago, and now the digital revolution. Most of the productivity gains in the US comes from the high-tech sector. We don't have that. Take the case of the of investment in artificial intelligence. In the last decade, investment in artificial intelligence was $330 billion in the US, $100 billion in China, 20 billion in the euro area. Now we have to recuperate, we have to close this gap. Can we do it in a piecemeal fashion at the country level in the euro area? No. No individual member state in the euro area has the size and the capacity to match the investments which are taking place in the US and in China. And this is why the Draghi report and many other analyses suggest that we must invest at the European level on common European public goods. And these public goods are many. One, the very important, the most important one is the capacity to invest, innovate, and grow in technology sectors in which productivity is rising fast in other countries.
How do we overcome political resistance to all of these reforms? Because we have been agreeing on the diagnostics for quite a while. I think there's also broad agreement on the solutions and the reforms needed. But when it comes to actually implementation of the reform steps, there's always resistance at the national level, at the industry sector level.
Well, first of all, now our incentives, the incentives of the member states are more aligned than in the past. In the past, we had a very strong economy, Germany, that differed from the, in which the conditions of the economy differed from the conditions of the economy in other countries. Now, unfortunately for Germany, we seem to be much more aligned. Second, it is true that there is no political support for European level investment. But 10 years ago, if you had told me that we would have a project such as the NGU and the recovery resolution plans, would have told you why it's unlikely. Then we had a crisis, and then the alignment of interests and the need to respond to the crisis created the conditions, the political conditions, because that's a political issue, the political conditions for common investment. It is difficult. It's not going to happen tomorrow, not even the day after tomorrow, but there's a debate. The Draghi report was presented to the European Commission. We are starting a new legislature in the European Union, and I hope that the new Commission will deal with this problem.
Good. Moving to a different topic, to something which was dear to your heart when you were at the ECB, the digital euro. Why? What does it bring? And when you're looking at the form the digital euro should take, the narrow one for European citizens and with a small deposit facility, or a wider one with a larger allowance in the wallet and internationally acceptable?
Well, the motivation for which we started discussing the possible introduction of a retail CBDC, a digital euro, CBDC, central bank digital currency, was that the use of cash is decreasing, and it is decreasing fast in the euro area. First, because people have preferences for digital payments. Second, because people buy much more online. And when you buy online, cash is not that useful. So the role of cash is decreasing, and we cannot exclude that in the future cash will become a marginal means of payment. This means that given that cash is the only means of payment that is issued by the central bank, if cash becomes a marginal means of payment, there could be, might end up in a situation in which there is no means of payment that is issued by the central bank. We would be a monetary union, a strange one, in which there is no public money, no common means of payment. And for this reason, we started discussing the possibility of issuing another, an additional means of payment issued by the central bank, the digital euro. Now, we are in a phase in which we are starting the construction of the prototype. We will, I think, have the first prototype in a couple of years, and then the experimentation should start. Should it be limited for its use to European citizens? That was the idea when we started the discussion, but there we have to wait for the legislation, the approval of the European legislation by the European Parliament on digital euro. Of course, it's a means of payment. So it is thought for European citizens to use in everyday life. It's a retail means of payment, and the idea is not to have a large market share and to try to gain market shares outside the euro area. It's very likely that it could be used also by non-euro area European citizens, European Union, non-euro area. It's unlikely, at least in the initial phase, that it could be used by foreigners outside the euro area. Of course, tourists would have the possibility to open an account in digital euro when they come to Europe, but it will not be an instrument that we would issue outside Europe. Let me add one thing. We are also working in parallel, not only on a retail CBDC, but also on a wholesale CBDC, which is an equally important project. We already have a wholesale CBDC. It is our wholesale target system, and we are discussing enhancements in the technology behind target. We are working to complement the centralized infrastructure, the centralized technology we use for target with a DLT-based technology to be able to interact with markets, with the private sector when they use DLT-based technology.
Do you want to use the digital euro also to drive forward the internationalization of the euro?
Well, absolutely. In particular, the wholesale digital euro will be useful to preserve the international role of the euro, because many of the international transactions in the future might take place through a technology that is DLT based. And if you don't have the right technology to interact with the private sector, then the role of your currency would become less relevant, and we would lose I think something which is very important for the euro area, the international role of the euro. The euro is the second most important currency at the global level. The first is the dollar, and the weight of the dollar in total financial transactions is around 50%, 55%. Then the euro follows quite distantly with a market share of 25%. That's a very important element for the European economy, and we should certainly preserve it.
Thank you. And now we have time for some questions from you. Please identify yourself.
Thank you, President Panetta. My name is Gardana Yordanova. I'm professor at George Mason University, and I'm former servant of the European Central Bank. What are your expectations or assumptions regarding the merger of Unicredito and Commerzbank?
My expectation is that the European supervisor will assess the deal in technical terms and will form its view based on the quality of the project, which will be, if it will be presented by Unicredit, and on the strength, the capitalization, the profitability, the capacity to lend of the entity that would eventually result from the merger. On the outcome, I don't know. It's for the SSM.
Yeah, we had another question here.
Mathieu Dieudonné speaking from MPG Asset Management. My question would be the following. You mentioned the weak economic outlook for the Eurozone. You were a little bit more positive on the inflation outlook, but at the same time we have we have a lot of long-term factors that could weigh on inflation: demographics, decarbonization, defense expenses, which are quite well known. What makes you so sure that we are not moving toward a stagflationary environment in the Eurozone?
Well, all the factors that you mentioned are long-term factors, and our policy horizon is much shorter. The policy horizon of our monetary policy is between 6 to 1.5, 3 years. That is the policy horizon that we have. And the idea that in the future, maybe 10 years from now, structural factors might influence our inflation rate is outside the discussion we have. Of course, we discuss economic developments, we discuss the trends of the economy in the long term, but when we do monetary policy, we are focused on the policy horizon.
Mm-hmm. And we had another question over there.
Yes, thanks. Steve Lorne, USAID. Just to pull on the digital currency issue for a bit, and I could be wrong in this. If you issue a digital currency as ECB, does that get the central bank into retail banking? And if so, do you see that as an issue where a central bank is a lender of last resort, or is something behind the traditional retail banking area? Just your thoughts on that, if you wouldn't mind.
No. We would continue to do what we do already today, provide a means of payment. Today it's made in paper, in the future it will be digital. We will not offer any banking service to holders of digital euros. Those would be for the banks to offer to their customers. We would supply a digital euro for basic payments. If the users want to attach to the digital euro app additional services, they should interact with their bank. We are not going to invade the space of banks in any way.
We have time for one more question, please, here.
Good afternoon. My name is Aryan Khanna. I'm a student at the George Washington University. And going back to the point of CBDC and digital currency, how would the central bank sort of focus on countering concerns regarding privacy and tracking currency transactions, especially as there are concerns surrounding the implementation of cryptocurrency and blockchain in terms of usage?
This is a very important question, because when I was at the ECB and they appeared in front of the Econ Commission of the European Parliament, when I dealt with consumers, with pensioners, the main topic was privacy. Now, in the legislative proposal, which was presented by the European Commission in agreement with the ECB would have no access on the personal details of the payer or the payee in a transaction done with digital euro. They will not be available, so that we don't have even the temptation to look at the data. Second, the ECB is not a profit-making institution. We don't do this because we want to make profits. We do this because we want to preserve the role of central bank money in the euro area. So we have no interest in getting the information on users to exploit them for commercial purposes. Why do the payment service providers that we all use extract our information? Because they do cross-selling, bundling, they try to understand what are the tastes, the financial capacity of the customers. We are not in that business. We will not do it because that's not our job. Second, again, let me repeat, we would not have access to the detailed personal information on the users. We would see a cryptographic code between one payer and one payee. Each of them will have a cryptographic code. We will not know who is the person who pays and who is the person that receives the money. But still, it's a very important question, because people mistrust even the authorities when you commit not to look at the information on personal information on the users.
So, like with monetary policy, a lot of communication
Absolutely.
is required
Absolutely.
in order to explain and
Absolutely. Very important.
rule out the risks, the fears
Absolutely.
with that as well. No, with that, thank you very much for attending the sessions. Thank you to
Thank you.
Fabio, and a big applause, please.